I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermuelen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me on the show, Jim.
How is the Nasdaq doing?
Well, you know, the Nasdaq has been on a tear. Obviously, we got the FANG stocks in there. It's tech heavy. It's biotech heavy. We've seen really the Nasdaq has been outperforming the other major indexes like the Dow and the SP 500 simply because they're more weighted in the tech and the biotech sector here. So we're seeing a pretty good pop and rally especially the last more or less 3 or 4 trading sessions on the Nasdaq, and you know we're seeing it struggle. We're seeing the SP 500 struggle simply because I think the rising dollar is pulling a heavy toll on multinational companies, and the SP 500 definitely has been under pressure because of that really strong dollar, I think, in the last month and a half.
Do you think because the Nasdaq's been rising the highest and it's tech heavy, it's probably the most exposed because it was high tech that crashed back in 2000?
I do. I think, you know, actually I did a report last night that's talking about how, you know, it actually looks like the Nasdaq, based on different types of analysis, is actually starting to run out of steam. There's a little bit more room for it to squeeze higher here. But our forecasting analysis shows that there's actually going to be another big drop in the Nasdaq. Not till later this year, till October, January, we could see a very, very sharp drop in the Nasdaq. And I don't see the Nasdaq going a whole lot higher from where we are now. Maybe a few percent higher. But based on everything that I've been looking at, fundamentals, the technicals, and where money is going to start to shift likely, I think we're going to start to see actually the SP 500 and the Dow start to outperform and play catch-up to the Nasdaq while it more or less trades sideways. So it's going to be really interesting how we go into the second half of this year and into the year end. And the U.S. dollar has definitely played a big toll on large cap stocks because the strong dollar holds those down. And when you look at the companies that aren't directly affected with a higher dollar, you look at the Russell 2000, and that's the small cap stocks. These little companies that aren't huge multinationals selling their services in U.S. dollars around the world. They're small little companies producing things, and these companies continue to rocket higher. We're seeing the Russell 2000 hit new highs, and so there's going to be a big shift, I think, from small caps and tech heavy into more or less the big blue chips the second half of this year here.
Why would they go to the blue chips?
Well, you know, the money's always looking for, it's always on the hunt for the best return on investment with the lowest risk, and with overseas issues taking place and falling currencies globally, the U.S. dollar currency is rising. People naturally want to go to where they feel and think the safest place is, which is U.S. equities, and of course the tech, the FANG stocks. Naturally, people move to what they know, and that's what those stocks are. That's what the Nasdaq holds. So we've been seeing a lot of money move there and into the U.S. dollar itself. But I think the time is just going to come to an end where those stocks are going to get overpriced. They're getting overextended. They don't have a whole lot more upside based on the weekly chart before they're going to probably go into another consolidation. And money's going to start to, once it starts to sell off in the tech, we're going to see a rollback, I think, into the blue chips, kind of the little bit more boring kind of plays. But I also think we're going to see the U.S. dollar start to pull back a little bit here. And that will help, I think, really pop prices in the SP 500 and the Dow, and really start to move those indexes higher while the Nasdaq treads water.
We'll have more with Chris Vermuelen right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, with a rising U.S. dollar, how is that affecting gold?
Well, obviously, a rising dollar usually puts downward pressure on gold, silver, and mining stocks, which more or less it has done with gold. Gold has been moving a little bit lower and sideways, a little bit under pressure since the U.S. dollar really started that big rally to the upside in April. But considering the size of the dollar rally, gold has barely really pulled back. It's only back, a few percent. And if you look at the other sectors, or the other metals like silver and the mining stocks, they're actually trading more or less positive or neutral during this whole time frame. And I think what we're seeing is a lot of fearful money moving from overseas into the dollar as a safe haven currency to get away from their dollars falling overseas with their own currency. And people are also moving into precious metals, but we're not seeing metals really move up because the dollar is keeping it really dampened and under pressure. I think if the dollar wasn't rising, we would probably have seen a very strong rally in precious metals, but it's been completely muted by this massive dollar move higher. And when the dollar does finally stall out, trade sideways, or pull backwards, I think we're going to see precious metals really have a big pop and a run to the upside going forward here.
Most of the big banks posted very large profits in the first quarter, but how are they going to do going forward?
Yeah, I don't follow the banking sector too close, but obviously when we've got defaults and all these things going on overseas, it definitely raises concern with the financial sector, and we saw it get hit really hard about a week ago with the XLF financial sector taking a big hit to the downside, and it's struggling to recover. It's still in a very strong basing formation, but there's a lot of fear, I think, with what's going on, and people are just fearful with banking stocks simply because they are always connected into that. If there's financial issues, banking stocks are going to be at threat here. So I think until the fear kind of dissipates with the whole financial sector a bit here, I think banking stocks are going to hold tight, build a base, and eventually usually fear fades away. And I think fear is slowly fading away, and I think eventually we're going to see the banking stocks take off and actually post some pretty good gains here over the next few months.
We'll have more with Chris Vermuelen right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, did the threat of new tariffs throw a wet blanket on the markets, or were they already prepared for it?
It's tough to say, really. there's so much talk about tariffs and what Trump is doing. It's hard to tell if it's going to happen, if it's not going to happen, if they're going to get reneged and taken back off the table. So I don't follow the whole tariff thing too closely, but I've heard enough of it in the last little bit that I kind of turn a blind eye to it, and I don't really pay too much attention. Obviously, there's going to be, if there are the higher tariffs, it's definitely going to affect companies directly related to it, and it could backfire for sure back on Trump or United States if they don't do the right thing, or they put too high of tariffs on certain things.
Are there sectors that would be important to you, or again, is it more of a technical trade for you and the outside news is just noise?
To me, it's mostly just noise. I follow more or less the raw price action of what's going on in the market. So that's one of the reasons I don't follow the whole tariff news going forward really too much at all. I just follow the money. If there's a big technical breakout or formation forming, I like to focus and hone in on those patterns and get ready for some type of trade. But I typically don't follow the news whatsoever or trade based off tariffs or anything like that.
What do you expect is going to happen in the crude market over the summer?
Well, crude oil typically is rising this time of year. Obviously, transportation picking up, but we've been seeing it have a pretty strong correction the last 2.5 weeks. And, it's not a bad thing for the market. Crude oil is more or less in a bull market. It is having a technical pullback at this point, which is actually very bullish in the long run for the price. You can't have price rally from more or less about $58 per barrel all the way up to $73 without having somewhat of a significant correction. And this is a nice technical correction. The market got a little overbought. It hit more or less a long-term resistance area, and it's having a nice pullback. I do think there's a little bit more downside to go. I have cycles bottoming out in about a week and a half. And based on the short-term price action that has formed, which is a bear flag over the last 2.5 weeks, I have a downside target of oil reaching somewhere $62, $63 per barrel. And if we get down to that price over the next week and a half or so, that is a very long-term support zone on the market from back in April. And really all of this year, it traded through that price range, and it was a very significant high back in May of 2015, which was that breakout level to more or less a bull market, the $62. So if it drops back to that $62 per barrel, I think we're going to see at minimum a technical bounce, meaning we're going to see just buyers step back in. It'll be oversold at support, and we should see a decent bounce. But I am expecting we'll see a much stronger rally from that point forward than just a technical bounce, but definitely a tradable bounce if $62 per barrel is hit.
Chris, anything else you wanted to add today?
I think we more or less covered it, other than, if you take a look at bonds and utilities, which I like to follow together, we're seeing bonds pull back, we're seeing utilities pull back. That's a sign that money is starting to get bullish on the markets again. And I think the equities market in general is on the verge of a continuation move. And I think some of the biggest gains are actually going to be in the S&P 500, the Dow, and some very select sectors within the Dow going forward. So it's going to be really exciting the next couple months going into the summer. We're setting up for a nice summer rally. And that's really about it.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermuelen from thetechnicaltraders.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Questions for the show can be sent to info@HowStreet.com. And don't forget to listen to our show This Week in Money every weekend. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.